he has some swagger in Iger to win the vote, hasn't he?
Yeah, I mean, look, Iger is known to be the most powerful executive in Hollywood, and this really was a big thorn in his side that sort of gives him some steam going into the turnaround that he really needs to execute at Disney. And man, as you said, you know, this difficult proxy campaign is now over. It was one of the biggest, most expensive. Disney spent $40 million on the campaign. They sent campaign videos to individual investors. There's a lot of retail investors in Disney. They used Donald Duck's uncle in some of these videos. They talked to institutional investors to win it. But as you said, the challenges are here. And a lot of the issues that Nelson Peltz was talking about succession, about some of the content, those are not solved and they still remain.
Now, is Nelson Peltz going to retreat? I mean, he says he's going to continue to watch the performance from afar. So it sounds as if it's sort of slightly less aggressive tactic in the first response. What do you think is the next step for Peltz?
Yeah, I mean, look, this is his second proxy battle with Disney. You know, the last one was just, you know, the year before. And so what we do know is that Nelson Peltz's Tryon Partners has controls $3.5 billion of Disney's shares. So they still have a lot of skin in the game. And as, you know, I mentioned, those issues just are not resolved yet, you know, and some of these content issues are difficult. It's really difficult to produce a movie. It's really difficult to produce a hit. And that was one of the issues that they were talking about. And of course, Disney has long had succession issues. Of course, we know that Bob Chapek was really only in the seat for 2 years. Bob Iger is back in his kind of second tour of duty as a CEO. And again, that wasn't solved yesterday, and it really remains to be dealt with.
Look, Iger has taken the streaming business, dragged it kicking and screaming. He's cut a lot of jobs. He's gone for a big capex plan in the parks. You know, where does Disney go from here?
Yeah, I mean, look, it's looking like the fundamentals are pretty strong. You know, in February, in one of their earnings calls, they actually took the rare step of bringing out some profit projections for this year, and profit is expected to be up 20% this year, so that's a positive story that they've got. We know that, you know, they treated the proxy battle like a campaign, and in a lot of ways, they're treating some of their infrastructure investments sort of like the Inflation Reduction Act. They are saying that they're going to put $60 billion into parks, and we know that parks are really important for Disney. They're, you know, 70% of profit for this company. And so trying to make sure that they're making these investments, that they are, you know, evolving for the streaming era. We heard Iger talk about a deal that he's got with some competitors to try to modernize ESPN for the streaming era. These are the things that they're going to need to focus on, but these are the things that are really difficult.